Good evening, ladies and gentlemen. I gotta talk to you Canadians out there. You guys need a little bit of a talking to. I can't turn my head away right now without somebody poking at what is going on with the Canadian economy. A lot of this has been stirred up by tariffs, a lot of what Trump's saying. And I just find it really intriguing to see the Canadian perspective on it because I've been reading so many comments, and I think people are really not understanding the benefit that you have living here from a financial standpoint point. Because as I told you guys, Canada wants you to be rich. If you understand the tax code, the tax advantage accounts from a TFSA to an RSP, there are very few countries in the world where you can travel, leave the country you live in, go live and work somewhere else without having to pay your own country a fucking state tax when you're gone. I mean, I just can't get over how progressive this country is, whether it's in gay marriage, drugs, you name it. This country is far beyond so many other places in the world. Yet everybody right now is coming down on this place like it is an absolute crap hole that is not going anywhere. But I really want to change your perspective on that. Tonight, we're going to take a look at some of your comments, questions. We're just going to engage with a lot of the Canadians that are out there, the thoughts considering even if Trump wants to tariff us and our energy, guess what? Our companies are the bloodline of the entire Western world when you're talking about companies like Enbridge. Our banks have crushed it. In fact, the Canadian economy from the stock market standpoint has outperformed the US over the last 6 months. There's so much going on that makes me love this country. But right now I feel like there's some kind of just really bad karma. A lot of people are pointing out things, and I'm not saying it's perfect by any metric, but man, you guys need to take a breath and really go expand your minds and go look at what's out in the world. Because I love making money in the US, but I don't want to live in the US. It's just my personal opinion. Everybody's different, obviously. And maybe we'll read some of your Q&As quick before we even get into it. But I do want to do a quick honorable mention before we go too deep. On my last live stream, this comment, man, it rings so good. My shorts are small and my longs are large. A man in a wool hoodie stands alone against the AI FOMO. And our boy here, who I'm going to shoot an email to and see if I can actually get an interview or something with him, because he's a pretty small channel. So maybe he'll appreciate it, because I feel like I'm responsible for driving a lot of the views to this video. Not a huge amount, but I appreciate you guys that actually went out and, were commenting or whatever. Because this dude, really laid out an interesting Palantir short, right? That definitely worked to his favor. I mean, since he posted that video, I mean, Palantir over the last week alone, down 10%. So it's definitely working to his favor. So this guy needs a good honorable mention. I need to make a nice poster of historical moments that are happening on this stream. Of the ball some people have is absolutely incredible. But we'll come back to this in a moment because I do want to focus on some of the Q&As we've had over the week from ETFs. We'll talk about telecom giants, banks, you name it, baby. We're going to get into it, but let's get into it. Patrick, yo, what's going on, man? Do you think VDY could outperform the SPY this year? It really depends on what the state of the economy is going to be looking like. But if you think we're in an AI bubble, if you think there's some potential for tech to lackluster in performance, yes, it's very likely that I imagine some point in the future here, if we keep cutting interest rates, we'll see better performance out of some of our companies for sure. VDY going to pay every month. That's all you need to know. But I got other monthly pairs that you're going to be intrigued here. Somebody, I don't want to jump the gun, but someone has been recommending really fascinating ETFs, especially in the Canadian economy. Did you see AB, the premier Danielle Smith take photos with Trump, brokered by O'Leary? No, I haven't. I can't turn social media on right now without seeing some politician, some government, someone talking about Trump and what's going on. It's crazy. It's crazy. I'm so over politics. People are so fearful about what's happening tomorrow and nothing's happened. It's we'll get to it. But it's going to be a speed bump this month. Next month will be better. Yeah, we'll see CAD dividends in my TFSA and RSP, S&P 500 and taxable accounts. Yeah, it's not a bad way considering the Canadian government only taxes you on 50% of capital gains. Unless you make over $250,000 in capital gains, then you get that 66% or whatever it is inclusion rate that they changed, which, by the way, hasn't actually come into law yet, I don't think. Leftists are in shambles over it. What's RDSP? I don't know. I'll have to take a look here. But registered, disabled savings plan. Yeah, probably why I haven't heard of it. It's probably more for a unique set of people. But in Canada, most of my coworkers don't have any money left over at the end of the month to invest after paying their bills. No real wage inflation in Canada. That's the main problem I noticed. So this is what's really, really interesting to me, because we're still dealing with the whiplash of the pandemic. And the problem is a lot of people I find complaining about the Canadian economy. If you go almost anywhere in the world, they are having a lot of the similar issues, because obviously the once in a lifetime pandemic that hit, causing a godly amount of money printing, but it was better than watching the entire economy collapse, people lose their houses, their jobs, the subsidies. I mean, it saved the economy, right? Like that's what people have to remember, but it caused a lot of the inflationary pressures we're still dealing with today. It's, the whole reason interest rates went up. And now we're dealing with an economy where obviously wages haven't grown, but you could say the same in the United States. In fact, you go to Japan, people are saying and complaining about the same thing. Europe right now, the UK, people saying the exact same thing. Housing's too expensive. The wages don't pay enough. And a lot of these people are learning that unfortunately, sometimes you have to move. And I don't think like blanketing Canada as being like this crazy overpriced thing. It's just not as easy as it once was. Like nothing's just being handed to you anymore like it was for our parents' generation, which sucks. I mean, it's unfortunate. You can't actually, I think it's almost reverting back a little bit because now if you have like skilled labor jobs, I mean, my dad works in, doing foundational work for homes. Like it's jacking up properties, moving houses. Like it's crazy work. And he's like, the average age of the people working there are old. My dad's like almost 70 and he's still doing this. And there's not a lot of young guys coming in, right? But those jobs are high paying. And if you just go to a place where there's demand for that, but you're not in Ontario or Vancouver, I mean, prices aren't crazy. I know they've gone up recently in Calgary and Alberta, where I personally like a lot. It's starting to get expensive. But realistically, if you're willing to be malleable, you don't have to live in one of the most expensive provinces, just like you don't need to live in New York or San Francisco. I mean, like it's just, you have to be malleable in a market environment like this. So you just keep that in mind, right? Like you're going to hear a lot of issues and they're going to blame the government for it, but realistically, they're global issues. Everybody's struggling right now in that sense, except for the United States to some degree, but they don't appreciate how strong their dollar is and how to take advantage of it. Just like most people in Canada don't know how to take advantage of taxes. I mean, you can realistically be a sole proprietor, work a real job, have a side hustle, write off half your vehicle, write off part of your property or rent, write off half your food, write off a lot of your travels and everything. And nobody really, I say that shit. Nobody's like, oh, who does that? People that want to be rich, like, work the tax code, man. I've been self-employed my whole life. So it's like, I've always seen this side of things. But would you say SCHD is similar to VBL? I'm not too sure. I'm going to get into this, guys. So let's get into some of the Q&As. I'll read one more comment here because you guys have a lot going on. Kyle, back in your wealth accumulation phase of investing, what percentage was allocated to Canopy or almost all of it? Back in the day, maybe not Tesla because that was 2019 era, but when I bought Canopy, man, that was like the first stock I ever bought. I was broke. I maybe was saving 5-10 grand. There was only 2 stocks I owned back then. I don't even know how much I owned of them, but it was Canopy Growth Corp and Northland Power, which I don't own either of those, thank God, because I made really great money on those picks. But these days they ain't doing as well. Kyle was a wild man back in the day. I was a broke man back in the day. I grew up on a sheep farm, shoveling shit and stacking hay, man. I had to grind. My parents were not upper middle class or any of that. My parents were just super hardworking people. But nonetheless, let's get into it, folks. By first and foremost, just again, admiring how fruitful the Canadian economy has been over the last few months, nonetheless, 6 months, as the VCE, the broader Canadian index, outperforms the S&P 500, with the exception of VFV, the counterparty CAD hedged version. But yeah, for the most part, the Canadian economy has been on an absolute tear. So I'm very glad that I own Canadian stocks because they do help balance things out in moments of volatility like we're experiencing. Now, you don't have to be like me. Obviously, I'm not a financial advisor, but first Q&A here. Hi, everyone. What's your thoughts on how Trump's 25% tariffs will affect Canada? I just kind of abbreviated to this. I'm not going to get too into it. I'd love to know what you guys think in that comment section below, but I will say I think it's still going to be a negotiation tactic that isn't actually going to come into fruition because it's going to largely absolutely slaughter inflation in the United States. I think more people will complain, but who knows? Trump's a wild card. Anything can happen. Don't speculate on it because that's what a lot of you are doing, and it scares the shit out of me because people are losing their way of wealth. Because if a potential stock market crash is coming, what is the best option for shareholders is setting up a stop limit, sell limit, or trailing stop limit. So neither of these, because I am a long-term cost averaged investor. I don't know how far the market can drop. I don't know where to time the tops and the bottoms. So why would I set a trailing stop on my long-term indexes that are going to continue to yield income and are going to continue to grow over my lifetime, right? Like there's just no reason for this. If you are in a trading strategy, if you're an options trader, if you're into that kind of stuff, or you're a direct trader, yeah, this would make sense, but I don't advocate for any of that, not as financial advice, but just as what I personally do. So what's your strategy for cash then? Do you leave it in a registered account, cash, HISA, these cash ETFs, which is another one. Cash is actually the ticker for a similar ETF to HISA. I think there's PSA or another one, the Purpose High Yield Saving Account. Personally, right now, I don't really do much with my cash. I'm probably sitting on over 50K in cash. I usually sit on quite a bit. I don't show it in my portfolio overviews anymore because I have tax liabilities. I don't actually know how much cash I have, especially in tax season. So it just doesn't make sense to show it like as part of my assets. Plus, part of it goes toward property. We have shared accounts where we have an emergency fund just for, the mortgage and property costs. I have my own accounts. The wife has her own accounts. I have corporate accounts, all that stuff. So personally with cash, I put probably some of my tax liability into a high interest savings. I don't use the high interest savings ETFs. I personally just like having the cash purely liquidable at any moment notice. I don't want to have to wait for shares to settle. I don't have to move it between accounts. I'm kind of like Dave Ramsey that way. Just it has to be liquidable and it has to be there. So we keep about 6 to 12 months for emergency funds, which right now I'm building up my cash because, hey, guess what? I had an emergency over this week. My caliper on my back tire seized up and I can't use my car right now. So I have to tow it to the shop. And as Dave Ramsey says, when you have an emergency fund, it's no longer a do or die moment for my accounts. It's just a mild inconvenience, but I'm not sweating it at all, baby, because we stacking that cash. But it does annoy me a little bit because I can't invest and it puts me on edge because I have to see how much cash I have after all these costs and expenses. Hi, Kyle. I came across your channel about a month ago. I love your passion and knowledge you bring to every episode. Appreciate you greatly. I've been looking into getting into ETF stock in the stock market. Quick history about myself: early 40s, no mortgage, paid off, pension, benefit, contribution, emergency nest egg of $40,000, and 3K of disposable income monthly. I like your approach to investing. What recommendations would you make for someone like myself? I'm willing to take risk. At your age, you're in a good position. You really need to start contributing probably a lot if you haven't started contributing already. And honestly, you're gonna have to figure out your risk tolerance because you say you can handle the risk. You've got probably about a 20, 25 year time horizon ahead of you. It's a little bit shorter. So, it's really hard. I can only tell you what I would do. And honestly, it depends on if you would like to hold high interest savings, maybe lock in some government bonds or whatever while they're still paying a decent amount in the United States. If that's where you're from, or even in Canada, it might not be the worst idea. And then maybe just focus on global ETFs, right? I'll go through some of the comments and questions because I do relate to this. I'd love to know what you guys think. It's so hard to tell someone how to invest, especially later, because I can tell you what I do for my parents in their retirement. I can tell you what I'm doing at my age at 30, what I did at 20. But if I was 40 and, I'm sitting in your situation, at least you've got a good pension, you've got some stuff set up, but I would take that 3K every month and just start loading in probably broad-based market ETFs like XEQT or VT or something like that of the sort, just because I'm a little less risk at that age, in my opinion. You want a little bit more, less volatility and more guarantees, but great looking portfolio. I'm just wondering why don't you have any international exposure other than the United States? So I am somebody who still wants to outperform to some extent. Again, in my 30s, I think I'm taking the appropriate risk. I do not want broader based global ETFs. If they do start to perform, like I would probably start diversifying a bit more, but I could honestly retire on US and Canadian stocks because most of the stocks are globalized anyways. So that's how a lot of people tend to think about it. Like, why do I need to own hundreds of stocks, thousands in something like VT or global market ETFs? Yeah, if I don't want to pay attention to my portfolio for the next 30 years, that's probably the most prudent approach. But as somebody that likes managing their accounts, like if things start to change or I see better opportunity somewhere, I'll take advantage of it. But personally, primarily just investing in the US has made me rich. Being a little bit more concentrated, and even still at my age with the 3 ETFs I hold and some individual stocks, I still feel like I'm very concentrated at my age. But I think it's appropriate because I've got such a long time horizon. So moving on here, here is a challenge for you. If you could only choose one ETF and one equity stock, which ones would it be? Something you can throw out at the members tomorrow. A longtime follower and always give you the thumbs up. Thanks, brother. I'd honestly just say for somebody like me personally, if I could not touch anything after the fact, it'd probably be XEQT VT. It'd have to be a global market ETF that's passively weighted, so it manages itself. And then if I had to pick one stock, it'd have to follow a similar sort of metric. So maybe something like Berkshire Hathaway. Because honestly, over 100 years, I don't even know if Apple might still be around. Like, you don't know what technology can disrupt. If I had to pick one stock today, it would still be Google. I like Meta and Google, as mentioned, 2 largest positions. But if I had to pick one for me, Google, no problem. But over 50 years, I don't know. Maybe we'll see what happens, right? Because I need to be able to manage it. And you have to have somebody like Buffett's team managing it. But always enjoy your videos. Pretty new to investing here. I have 77 shares of TELUS at about $23.50 average cost. Would anyone recommend buying some more at the current prices to lower my cost average? Dividends look good. And I like Kyle's outlook in the future of the company. So we are in a volatile moment. Somebody was making a really good comment a little while ago saying that the Canadian banks took a massive dip. And as mentioned, they buying opportunity of a lifetime. I was screaming to you guys, if you're a Canadian oriented investor, that was the opportunity to buy. And now a lot of people are saying that is what's happening to the telecom giants because they, like the banks, are monopolies. I'm still paying my phone bill. A lot of the revenues are incredibly stabilized. So the question is, are we in a phase right now where it's just, momentum following momentum? As mentioned, we live in a market environment where stocks start to go down, people start to short, traders take advantage, margin is very easy, and momentum tends to continue pushing momentum. And that's what we've been seeing in the telecom giants, right? If we take a look, for example, here, for some reason, we are in an absolute calamity with Rogers. All of these stocks, with the exception of Bell, have like extreme analyst buys. Like a year to date, Rogers is down 5%. And I don't know why. At this point, I can't figure out why. If you look at analysts, it's kind of hilarious because like they're almost all bullish at this point. The stocks are trading like at ridiculous levels. TELUS, over the last year, even just this year, has been holding a bit flat. But I mean, these stocks are getting absolutely hammered. Look at Bell. Bell's down like 1% so far on the year. They just can't stop going down. So somebody pointed something really interesting out that Globex is coming out with market sector ETFs. And there's one here called the Ring, which is the telecommunication index. And it only holds 3 stocks, literally TELUS, Bell, and Rogers. It hasn't had a yield, but they're distributing the yield up monthly. So this ETF is actually paying a monthly yield off these things. And I think it's close to 7% right now. It's paying like about a 0.11 distribution monthly. So they're literally like, hey, we're going to charge a low fee, 0.25%, which I don't think is terrible. Well, you can buy this ETF and we'll distribute monthly cash from the telecoms, which I think is an awesome perspective. Because for me personally, I'd probably buy them individually or pick something like TELUS because I just like it more. But if somebody like me that loves the idea of paying bills with dividends and that initial thought of saying, hey, like how much of these telecom giants do I have to own to pay my phone bill? I could just own it through this ETF and literally use these funds on a monthly basis to pay for those expenditures, which I think is awesome. Somebody also pointed out that Globex just came out with an equal weight Canadian REIT index as well. Which is really cool because this yields over 5%, and the holdings in it I absolutely love. Because I was shocked at the holdings that they picked for this because there were some of the ones that I actually prefer. So they have like slight groceries in here, Primus real estate, some that most people don't talk about, like First Capital, Chartwell Retirement Residence, Artis, Smart Centers is in here, Allied's in here. Like there's a lot of good REITs in this. So I'm got to give, Globex some credit here. I think they're actually putting some pretty unique stuff together for those that are more secularly focused. And if you want to see how the Ring ETF for the telecom giants are held up, it's 36% TELUS, 33 Rogers, and 30% Bell. Really fascinating ordeals here with these setups. But yeah, otherwise, let's read a couple more Q&As, and then we're going to get into it with you guys down in the comment section again, because I know there's a lot going on right now, but this was a good comment here as well. I'm a noob. So I've been watching 100 videos a day. I drove LA to Tahoe and back yesterday, and I'll be on the road 18 hours tomorrow. This is why I have a ton of dollars to invest. Should have done it last year, but doesn't all this diversification seem like covering a roulette table with 12 chips, all covering the corners of the 36 spots? Sure, you'll win, but you'll have 12 chips to win 12 black. I'm not sure what you're getting into here, but you can cover the table with 12, then maybe remove a few and only have 10, a little riskier, but a bigger payout. I know Buffett says diversification is admitting you know nothing about the market. Now, I just bought 40K of the Schwab Growth ETFs and using it as a savings account for the next 20 years. But we all want that 350%, 35-to-1 roulette payout. What percentage of your portfolio do you have in high-risk stocks? I think anytime you buy an individual stock, you are taking high risk. I think some people get disassociated with the idea that Apple, Google, Amazon are safe investments. These companies can go through massive secular changes and their stocks can drop dramatically, as we saw with things like Meta dropping up to 80%. Those are considered highly risky investments. Anything can change at the drop of the dime. Now, when it comes to super high risk, in my opinion, the only other company that I have a deep affection for, which somebody pointed out that Duro right now is trading on sale. As mentioned, I'm not a big fan of small cap ETFs, but I do like buying small caps when I come across companies that I've studied for a long time that I personally like, and I really enjoy management and what they're doing. Now, these are companies people look at the balance sheets and they presume because they make no revenue. You couldn't look at a company like this and judge it off its balance sheet. It would be absolutely impossible. Even though they just did a good job raising some capital, they're good for the next year. But for those of you that are unaware, Duro potentially has a gold mine of technology that's going to revolutionize the plastic industry by turning it back into oil. It sounds crazy. It's never really been done before, but it's happening. And there's other companies doing it, just not with the same, malleability and the same kind of, extended plastics that Aduro can, recycle. And they've got 10 clients right now that they're testing this material or this technology out with that are all worth $40+ billion. I think Aduro is going to be $1 billion+ company in the future, and it trades for about $250,000. I mean, you can pick and choose what you want. I don't recommend buying any of this stuff. It comes with extreme risk, but it's a small percentage of my portfolio. But, this is what I believe in. So we'll see what happens. Everyone to each their own, in a sense, right? But I do appreciate the comment because everyone's got a different version of risk. Just understand the risk you're taking when you're buying individual stocks. It is a lot riskier than people think it is. And in 2020, people thought it was easy. And then 2022 hit and people sorely had a rude awakening, right? So, let's get into it. Yeah, refining plastic. Any Bitcoin news? Yeah, BTC to 250K. I still have the measly amount of crypto that we hold, but I don't really care for it as much. Cameco. I mean, I haven't looked at Cameco too much recently. I'm not a big Cameco. Let's take a quick look. I spelled that horribly wrong, didn't I? Yeah, Cameco Corp. I don't play the commodities too much, but people are really kind of bullish on the uranium sector right now. But again, it really just depends on if that's something you enjoy doing. I still believe commodities come with like a lot of volatility and cyclicality. Even with uranium, like, do you understand like the dynamics of uranium? I know it's bought in stockpiles, and that's why you're seeing prices that are usually based off past stockpile buyings. Let me just see here. Let's take a look at the price. What's uranium been doing these days? Is it correcting at all? Yeah, it's actually come down quite a little bit. But I don't understand the uranium. You can play it any way you want. There's big demand for it, but I don't know how quickly people mine it. I know there's a lot of places in the US that stockpile the crap out of it. I don't know how those stockpiles come into play. You got to be a little bit careful with that. The only commodity that I do like are the utilities, right? Like, so we talked about it briefly, but Enbridge. So if you're Trump, if you think Trump's going to start manipulating oil and tariff and all this stuff, it doesn't really matter. Enbridge is like the pipeline. It's the lifeblood of the Western world. And regardless, I think, of what oil's doing, Enbridge is going to be needed. It's why I love that it's the third largest position in VDY. I mean, it's an incredible business. If you haven't looked into Enbridge, I highly recommend it. I've always loved it as a stock. A lot of people hate on it because the payout ratio is too high. I don't understand balance sheets and depreciation of assets. But I love that they're crushing. And a lot of Canadian companies have been crushing, really much thanks to the diligent recent acquisitions that Royal Bank did. Enbridge has recently done with the natural gas utility in the United States. I mean, again, everything's so globalized now, you can't screw with anybody. I'm sure Trump will figure that out sooner or later. Trump put 20% tariffs that affect. So it might affect the oil industry, but I don't understand how it can negatively affect Enbridge specifically, because regardless of the companies that want to ship oil down to the United States, Enbridge is like the highway for that, right? It's not like Enbridge is the one producing the oil. Enbridge is literally the lifeblood. They manage it like it's a utility. Like, I'm sure if you go have natural gas in your house and you're in a city, Toronto, wherever, go look at the gas pipe. It probably has an Enbridge logo on it, right? I'm going to go up a little bit here because I think I missed a few of your Q&As. I'm 18. I have about 20K between several ETFs, such as VFE, VDY, VMO. Also have some individual stocks. What are your thoughts on those ETFs? For me, as I try and grow my portfolio, you're 18 years old. I know VFV is great. VDY is fine. VMO, what is VMO? For at your age, man, depending on your goals here and how like you are the momentum factor ETF. Yeah, I mean, I would focus on a lot of growth. I'd probably be like 50%, pretty aggressive. Probably do what Dave Ramsey does to some extent, like really focus on higher growth vectors that you can cost average. You're so young, man, 18, and you're already investing. Jesus Christ. I met a kid yesterday. It wasn't a kid. He was 26, but I couldn't get over how smart he was. Because, man, I was an idiot. I hate that you guys have YouTube and all this privilege. I did not have that privilege at your age, bud. I had to learn shit the hard way, and it sucked. I mean, it worked out, even though with all the hoops and hurdles we had to go through. But, man, you're living the dream if you already figured that much out. You're the reason I got into Shake Tape. And I have over 1,000. Oh, you mean Shake Pay? And I have over 1,000 days now. Oh, streaking it good. Actually, I just opened up Shake Pay and I was shaking it the other day just to see how much the payout is. I think it's like 3 cents right now. Man, the easy days when you can make crypto for like free. It was wild. It's not as good as it used to be, but hey. Anyways, what else? Miss Econo, now called Enbridge. Oh yeah, they have thrown barbecue and community events in town. What is your prediction? LYCT. What is LYCT, bud? LY. CT stock. Let's take a quick look, shall we? Oh, Lyft. My prediction with Lyft, I can't get over that's only 5 billion. It just reminds me of like self-driving, and everyone's just like, if it's not priced into Tesla, it has to be, because I mean, Uber and Lyft are barely like a microcosm of the size of Tesla. I know a lot of people that are bullish on Lyft. I know a guy's been buying Uber as well. I don't know what's going to happen with self-driving. I'm really curious. I don't think it's going to take off as quickly as people want it to. It's not going to be like a flick a switch thing, but like I said, it depends on, are you trading these? Because I imagine they're going to do well in the short term. I just don't know what the long term looks like for the auto industry. It's a mess. It's a fucking disaster to try and wrap your head around that shit. So, I mean, I would probably be a bit careful with long-term investing in any industry that has large disruption ahead of it. Tell us time, baby. Yeah, that's not getting disrupted anytime soon. Any thoughts on what to do? I have 50K. You have 50K in cash? Are you crazy, bro? Man, you guys in cash. I talked to so many kids that have like more cash than I ever had at their age, and they're just so scared to invest it. I'd be balls to the wall, man. I have that kind of cash. I wouldn't be waiting. I'd start cost averaging today. What do you think about buying railroads? I love them, man. I've been talking about them. They might make their way into my portfolio, but I'm stuck in this kind of situation where at the beginning of the year, I try and front load all of my investments. I think it's the smartest thing anybody can do because, like, I'm one of those people that literally I will not pay a monthly bill for insurance. Anybody that pays a monthly bill for auto insurance is already getting ripped for over an extra $100 a year because they charge you for those monthly withdrawals. All companies do it. Anytime you have large bills with big companies and you want to do a setup payment, don't do it. They rip you off for it. So I got to pay a couple $1,000s for auto insurance coming up very shortly. We paid almost all of our property tax in 1 year. Like I already paid that. Like we're trying to front load all our expenses. So I'm not like, I don't have the cash that I'm comfortable, especially with tax season coming up. But guess what? In the next month or two, once that's behind me, and I do tax season early. I already gave my accountant everything, like literally at the end of December, because I already had my T4s. I'm like, even my accountant's like, oh, you have everything, so we can do your taxes. Like I front load the shit out of my financial life because I fucking hate it. I hate paperwork. I had to drop a W-8 Ben form off to the stupid corporate investment account at Royal Bank. I hate all of that shit. So you know what I do? Like a Band-Aid, I rip it off at the beginning of the year. I pay all that cash up front. And guess what? The rest of the year, travel, live the fucking dream. It's the best way to live life, man. And then you don't get ripped off and you can negotiate better because you're paying up front with cash. What percentage of your net worth should be in cash 6 to 12 months? You can put it in the HISA account if you want. But personally, I keep 6 to 12 months. Like I said, we always typically have somewhere, if I had to guess, somewhere between $40,000 and $70,000 in cash. Like we always keep a sizable chunk, but it rotates between all of our accounts depending on what we're paying for and what we're doing. Because sometimes we'll pay for trips and that might be like 5 or 10 grand, which will come out of a variety of different accounts. Because, I'll turn that trip into somewhat of a work experience. Like when we did that cruise, the Caribbean or the Mediterranean cruise I did last year when we went to Rome, and then we did we did Santorini. We did so many places. It was super awesome. But like, I really wanted to get an idea of like Royal Caribbean, make some videos about it, and I did. So it's technically a write-off, right? Because I'm literally trying to use it as an educational experience. Which, by the way, how is Royal Caribbean doing, man? Those things were crushing for a little while, right? But I love being in the industry I'm in because I can literally take it the tax advantages and write these trips off. But I mean, yeah, look at the last year, Royal Caribbean. Holy shit, what a tear! Should have bought some. If you actually own some Royal Caribbean, the cool thing is they treat you as a shareholder, like an owner. So if you own even a few shares, guess what? When you go on those cruises, they'll actually give you bonus things. They'll give you like credits to spend on stuff. It's super cool, actually. You guys should look into it. Like some things are really cool to be shareholders of because they actually appreciate you and they show it, which is cool. But yeah, so just some fun notes. But Palantir appears extremely overvalued and it's trading at a huge premium, about 30p. Did you miss the beginning of the stream, my man? We paid a respect and honor to Alex Pitty, the man, the myth, the legend, the guy that literally, my favorite saying of all time now is, my shorts are small and my longs are large. I'm like, oh my God, this guy's a legend. Its PE's got to be higher than 30 still, though. Isn't that a huge premium about 30? You mean like price to sales? I'm pretty sure their PE is still astronomical. I learned about ZMMK and CMR recently in money market ETFs. Yeah, I hold 15% in cash, always waiting to double down on cash. I sleep well. And I mean, it just depends on what your comfort is. But I know a lot of people that like, they just invest all their money, and I think they're fucking crazy, because I am somebody that has been through a multitude of emergencies in my life. During the pandemic, my entire career went to zero. And like, that cash that I had on the sides was like very helpful. I mean, I was thankful for the government subsidies, but trust me, man, like your car gets fucked and you got to go buy a car tomorrow. Man, I watched like, and you're in a down market, like you have to have an emergency fund. I hate when people try and argue it. The only people that argue it are like rich people, like spoiled rich fucks that have never actually had a real emergency in their life ever. So, I mean, like always have cash, man, because if the market dips majorly, like it's nice even having, you could dip into your even regular emergency fund if you have that kind of cash. I have 5,000 to burn. What would you throw it into? There's so many opportunities out there, man. What do you want? I personally, again, I can't give you financial advice. If you just want to buy shit, buy XEQT, buy VT. But for me personally, like I said, I've looked at like CN Canadian Nationals trading at a great price. TELUS, if you're fucking really wanting some risk and high yield, there's so many good opportunities. SCHD, the entire US like Pepsi and like discretionary industry just tanked. I mean, I'd be all over this shit like yesterday if I had the cash or like the room to contribute to my RSP. There's always an opportunity. This is why you should really construct your portfolio if you're like actively paying attention to the market in a way where you can like kind of increase the contributions to where the market might be a bit weaker to some extent. It does help, I think. Palantir could fall back to 50 or 40. Palantir could go back to like fucking $15 for all we know. Again, who would have guessed Meta would have went to friggin' to drop to 80%? Like I said, there is no limit to how high and how low stocks can go. And my favorite saying was like, it can always go lower. Stocks can always go lower. So I hate how people like somehow fundamentally think, oh, it's the analysts say it can't go any lower than $40. It's like, shut the fuck up. It's like analysts are like weathermen. They're fucking morons that get paid. I know people say lump sum is the best way to invest long-term, but being out of the contribution room when there's a sale is soul crushing. Yeah, that's why I have dividend stocks, right? Like that's why with like SCHD, I'm collecting like 3,000 or 4,000 annually. Like I always have regular money to invest. That's why I like having some dividend income. And again, I also plan on utilizing that dividend income sooner rather than later. Do you think about Canadian aviation? I think of Emirates and how they are highly profitable, but the Canadian aviation sucks. I'd avoid it like the plague. You don't want to own auto companies. Sadly, Tesla goes in that basket. Tesla's highly risky. All auto companies are. Aviation, anything that's highly like capital intensive or it's not as like reliable to an extent, I'd be careful. I would just avoid aviation. I don't like it at all. SCHD looks like it's about to break below its 200. Yeah, but cost average, man. I'd be buying it here. No problem. I've been buying MFA with a 0.35% dividend with a book value of 1842. So it's oversold and should bounce back to 1026. The upgrade is in the past 2 weeks. What is MFA? That sounds like one that I've heard before. And if I'm not incorrect, are we talking about Maple Leaf Foods? No, MFA Financial. Okay, I was going to think because I'm pretty sure MFC or something like that. Maybe, I don't know. Let me pull this up for you guys. Share this tab. Pull it up. What is this? MFA. Is this one of those like insurance companies here in the US or something? What's the intrigue with this? It hasn't done a whole lot. 14% yield. Okay, I see what you're chasing. PE ratio seems pretty low. I'm not sure what the deal is with it. I'll have to take a deeper look. That's more on you, pal. What are your thoughts on Adobe? So I've been debating Adobe because I'm not, like I said, I don't buy software companies with the exception of maybe like Google or Microsoft or something. But I do not like software companies because there's so much disruption all the time. And, I sit here and I listen to people try and give me a bull case on why, like, again, if we take a look at their revenues, for example, like, Adobe on macro trends here, let's just take a look at some of their fundamentals. So my big concern with it is that like CapCut has really taken off. You can do so much stuff that I used to do on Photoshop with Apple, like literally the free tools, just in Apple's like literal like photo thing. You can crop people in and out of photos. You can do so much. So like I know they have a bunch of other tools they've been coming out with that are trying to attract to the AI crowd and they have very stable growth. So, I mean, if you believe in it and you like the product, I would stick with it, but I don't understand these things well enough. Same with like Constellation software. Shopify, I think is cool, but they're just things I just don't want to own because like I said, I just do not understand them. I never have, I never will. Their net income has been flatlining a bit here, but it's a solid company from a fundamental standpoint. But again, keep in mind, I use Canva a lot. And to be Adobe should be very scared of it. And Adobe's a ripoff. I mean, Adobe charges a stupid amount of fucking money. Like, I mean, my wife only uses Adobe because her office subsidizes it for her. But I mean, I canceled it. I'm actually using like, quote unquote, a very old version on an old computer, and I refused to upgrade it. Actually, I was super pissed too because Microsoft switched everything to a subscription model, and that really pissed me off because now I can't use my Excel or anything. I kind of quit using it. because like I found a Windows key from 2018 and I'm like, oh sweet, I can get Windows now. And I was good, and I used it to unlock the whole suite. And guess what? Oh, this is only valid for a year. I was like, fuck you, Windows. Fuck you. I bought this, was a lifetime fucking thing, and you forced me out of something that I paid that should have been a lifetime membership thing. I hate them so much. SCHD, I mean, that's why the revenue is so stable, right? Everybody wants subscription. Pirate it all. Just pirate it all. I would only put SCHD in a TFSA if you don't mind the withholding tax. You're going to give up 15%, but at the same time, you can draw it out and not pay any tax on the income. So 15% is not killer. Adobe is an awful company ripping off its customers. Yeah, but I mean, it is what it is. That's why I'm not buying it. I don't understand it, man. RRSP, Fred, up to pay 15% withholding tax or pay. Yeah, I know, right? Watching you, basically, I was at kind of a corporate Christmas party thing, and one of my buddies gave me one of these lychee drinks. It tastes mostly like vodka, to be honest, but me and my wife, we did a little fun self-make sushi. So before I started the stream, we were actually making our own sushi, and it was really nice that my buddy gave me this because it kind of really went along with it. But I'm just sipping it. I might not even drink it all. I'm not that much of an alcoholic. I only drink if somebody gives it to me. Never buy booze. Quick question. I'm 22-year-old student, right? And I like 50% of my portfolio in dividends. I feel like without a dividend, owning it sucks. Don't get caught in that trap, man. Don't get caught in that trap. I'm sorry. Dividend investing is it sounds good in practice, but in reality, it's a surefire way to underperform the market. There's nothing wrong with looking at something like Telus though, and just saying, hey, if I think it's at a discount and I like the income, that could be part of the total return. But you should always focus on total returns. I hate when people negate total returns. I hate it. I hear it. So I don't care about total returns. I want cash flow. And then you know what they fucking do? They reinvest the dividend. So you don't plan on using the dividend anytime in the next 5 or 10 years. Oh, the dividend snowball, guys. The dividend snowball. Go look at my portfolio and look at the insane returns I have. I could roll all of that over into dividend strategy tomorrow if I needed the cash. And then boom, I'm going to have 10 times the dividends you're going to have because you spent the last 20 years focusing on dividend stocks that underperform the S&P 500, because most of them will. Let's be real. Johnson & Johnson, yeah, it was great if you bought it in 1990. But the last 5 years, it's had a negative return, hasn't it, from a capital standpoint? Maybe not including the yield, but what's the last 5 years? Yeah, I mean, it's down 2% over 5 years. Ooh, the dividend king, guys. I don't hear anybody gloating about Johnson & Johnson right now. You want to know why? Because it doesn't make any money. The only time people will talk about stocks and dividend stocks is if they're crushing it. People are going to be like, oh, let's look at things that are doing really well, like Lockheed Martin. We're not going to talk about the healthcare sector, though, because that went into the toilet. Let's talk about stocks that only do well, that pay better. I don't know. I just don't get caught in that trap. I love dividends. I am a dividend guy. Part of my portfolio is dedicated to dividends, but for the love of God, don't get caught in that trap. It's not a healthy thing. And I had to learn it. All of us did. I was too growth oriented, and then I was too dividend oriented. And now I feel like I've got a balance that suits my investing journey. But if you're young, don't get caught in that trap, man. I have trouble finding tool spreadsheets that show total returns. It's either stock appreciation or dividend returns. Buddy, send me an email. I'll hook you up, or go to kylelivingston.com. Links in the description below. I mean, you can buy my spreadsheets. They calculate total return and including the conversion on the dollar. That's why I show iCloud numbers, man. It's the best. The only problem with it is it only updates once every 24 hours, but it's been the best spreadsheet I possibly could come by for multiple currency accounts all coming together into a total return. You just click. I love it. But you should find an account like that or a spreadsheet. It's very, very helpful. I love my RealCan, hashtag RealClan. I can't say thank you enough. There's fucking almost 200 guys in here tonight, and I'm strong, Canadian proud. And I really want you guys to stand up when your friends are shitting on this economy and they want it to become part of the United States. I love making US money. I love Canada. I can get rich globally. Be smart. Take advantage of the tax system here. Use your TFSA. Use your RSP. I'm going to talk about the final boss. I'm meeting with a CPA that's going to be doing a video for my channel. The guy that actually used to write the balance sheets, the reports for RealCan. And I really want to talk about the final boss. The final boss of all investing and everything is corporate fucking start a corporation, become a sole proprietor. Yeah, I promise you guys, Canada wants you to be rich. I know it's a tough market environment, but if you're diligent, you're educated, I promise you, you're not overtaxed. You got more benefits than most countries have globally, including the United States. So let's bring it back home. I get it. things can be hard, but where there's a mix up in supply and demand, fix it. Don't just fucking leave the country. I hate watching these YouTubers. We're like, I'm tired of Canada, I'm leaving. It's like, okay, well, how about you become a doctor? Why don't you become advocated toward construction? Teach your kids to get into construction, build more homes, do things that add value to society where there's issues. You got to fix that shit, man. Nothing's perfect, but damn, it's good here. Stay cool. Stay awesome, folks. I'll catch you in the next.